Hey everyone, it's Rayce Robinson, your favorite Florida mortgage broker. Hope you're doing amazing. Coming to you with the most recent numbers here for our market here in Central Florida, covering through the end of March. So April numbers covering to the end of March. And man, have things changed. Not so much with the inventory, but of course rates and the Fed and what they're doing. So we'll look at the data. First of all, though, if you like the video, like the video, subscribe if you're going to buy a house, want to become an investor, buy Airbnbs. Try to give you all the relevant information to help you make those decisions on buying and financing those types of properties. So let's see what the numbers say here. So this is the kind of comparison that the Board of Realtors likes to do, which I like to look at. So interesting, this should be 2022, not 2021. This is month over month. This is year over year. So really you can see we did have a little bit of increase in inventory, but that was way offset by sales went from 3198 to 4100. So the story is still just incredibly low inventory. When I mean low inventory, I personally in 20 years don't remember inventory this low. It's exacerbated by, rates were low, supply chain issues, not a pent up inventory during when things were locked down. And so all of that is really playing out now, really all over the nation, right? So in our market, the median price went from $345 to $361. This is that right here, increase of 4.6%. So price is continuing to increase. One of the things I thought was interesting was 24 distressed homes account for 0.6 in the market. I mean, there's just no one in distress on their home hardly because there's so much equity. So why would anyone be in distress for the most part on their home? Plus, a lot of people are putting big down payments, and even if you're not, and if you bought a house last year for 5% down or 3% down, you still have lots of equity already. So really no major distress sales going on in our market. So what I like to look at here is, so I thought this was interesting because if you go back, the farthest this chart goes back is to October of 2020. 5,840 homes on the market, total homes, single family homes, condos, all of that equal to the 5,840. Well, this was considered a complete seller's market, very similar to now. Flash forward to now, only 2,478, half the homes on the market. And then interestingly enough, you go back here, there were 5,840 homes on the market. There were 3,634 sales. So really what we call like almost 2 months of inventory, just under that, right? Fast forward to now, not only is there low total single family homes on the market, the sales have went up. So that's just crazy. That's just everything we've been talking about on every one of these videos that I make. 27 days on the market. So what's changed? Let's look at that. So rates here says 4.2%. Rates are a moving target because occupancy, loan costs, they change literally every day. So this is always a pretty lagging indicator. So like if you look at most big banks, I was looking at Bank of America, they're advertising 5% with a 740 score. You've got Rocket advertising 5.25 with almost 2 points. That's really high. And then you can see this is mortgage-backed securities. As this is going down, rates are getting worse. So that is a trend that has continued really since the end of the year, and it's going to continue. The Fed meets 8 times a year. They said their commitment is to raise rates in every single meeting. Now, it's interesting to note a lot of those increases have already been priced into the market. It's really going to depend on what they say during those meetings, but it is interesting to know that this trend is just not going to continue in the short term. Who knows for the long term, which I'll talk about in a second. So I did this little kind of comparison. I thought it was interesting. Here's why rates matter. So $350,000 purchase price. If you look, a year and a half back or so, we were locking people in at 3%. That $350,000 purchase price would have a principal and interest payment of $1,475. If you look at it now at 5%, remember it could be a little lower, a little higher, but just to use a round number, that payment's $1,878, almost a $400 difference. So to say it differently, instead of borrower now qualifying for 350, borrower qualifies for 280, which is why interest rates being increased tend to be a drag on housing prices, because obviously people are qualifying for less, payments are getting more, and that is what the Fed's trying to do ultimately, right? Not so much slow the housing market down, but slow inflation down. Of course, housing's affected in that, so that's kind of their end game, right? Is to with the quantitative easing and about backing off buying, bonds and mortgage-backed securities, increasing the Fed funds rate. All of that kind of is really for the same result. So one of the things that I get asked a lot is what's the market going to do? So I was kind of making a list of, like, I lived through all right, had a little bit of technical difficulty there. So one, I was thinking, I made kind of a list here from one, millennials and Gen Z, like buyers under 40, are a tremendous amount. Two, there's going to be a supply demand imbalance for a while. Our builders have underbuilt homes for almost a decade, so that's really going to take a long time to catch up. Lending standards are really strong. The average credit score right now is 780 on like 70% of the loans. No one's underwater hardly, so there's no negative equity where people are going to be dumping their homes. And most of the big, predictions, mortgage bankers predicting homes to increase for the next foreseeable future at 4.8%, CoreLogic 6%, Realtor.com had an article about 3%. So all markets are cyclical. No one has a crystal ball, but probably for this year, next year, it's going to be more of the same. I will say, if you're going 100 miles an hour, I've used this analogy before, and you slow down to 20 miles an hour, it's going to seem like you're going we are going slower, but it's going to seem like some big change. But really, the market is still continuing to move forward, and I really don't see that stopping. I just don't see how it can with the supply and demand. So I'm interested to see how that all plays out, right, with the rates being increased over time and what kind of drag that creates on the market. And if we do see a jump in supply over time, then you'll see those kind of forces even out some. All right. So with that being said, if you're thinking of buying a home, now's still the time. Do it while rates are, rates even at 5% are historically low, just not COVID low. Housing prices probably will continue to rise. So if you're thinking about getting pre-approved, have questions on financing market, give me a call. I'd love to help. I hope you're doing awesome, and I'll talk to you soon. Bye-bye.